Hey, what's going on? It is Chase. It is the Stock Sherpa, the first, best, and only portfolio ever to do it on YouTube. So I hope everybody's doing really well. It is dark in here, but it's actually making the light pop a little bit better. So thank you for tuning in with me. It's Friday morning. We are on the heels of a pretty nasty bloodbath and a pretty bad week of trading on my part. I'm going to talk about some things that we can do to work around it. Also, kind of where my thoughts are here. Now, on Fridays, remember, Fridays are kind of like a midnight, I like to say. So, what do people always tell you? What your mom always tell you about midnights? Nothing good ever happens on midnights. Well, nothing good ever happens on Fridays. Even an up day on a Friday is scary because it can make you feel like you're near a false bottom. And this is a good week to kind of talk about that. So Fridays, there's almost no institutional money. There's a lot of traders taking profits. Of course, we want to see green, but we can't let that green fool us. But with all that being said, I am still extremely bullish, more bullish than I was last week, particularly on LabU and then on ERX. And I'm up on ERX, I'm down on LabU. This week, I'm down in every single position that I hold. I don't think that's would be a shocker to many people, particularly swing traders, but we'll talk about that and get through that. I have probably one of the better nuggets that I just thought of this morning. It's about 6 o'clock here, and I'm getting this to you early because I got some family in town and I wanted to get this done and stay loyal to all my subscribers and followers. But I've got a really good nugget about managing around positions that many traders probably will know. But it's also a good refresher. I forget about it all the time, or I have in the past. So let's get cracking, shall we? Try to bring the energy here. It's 5:30, 6 a.m. in the morning. But again, thanks for tuning with me. We got the goat here on the chest. I love this shirt. This company is called Rule. They're not in business anymore, but they have some of the coolest shirts out there if you're a golfer. Just thought I'd tell you that. That song is Third Eye Blind. Top 10 in my book, top 15 in my book, but definitely one of the top, 3 or 4 bands of the 90s, if anybody can remember that far. So, yeah, let's start talking about the week. Let's start talking about the day that happened yesterday. Yeah, let's just crack on. Did I mention I'm Chase at Ever Bullish? I think I did. All right, so I'm going to read a couple of ideas off of this newsletter that I follow. I don't really follow them, but I subscribe to them to get information on where the square money might be and what information is getting out there. And I'm actually... I can proudly say a lot of the times my information front runs this one, but they're a great resource, and this is all about helping people, so I don't mind saying who it is. This is a StockTwits Daily Rip. It's a good review of the markets. It's short and it's sweet. It doesn't give you any opinions. It doesn't tell you where things are going. It just tells you what happened, which is basically all newsletters or investment advice or whatever that you can get for free on the internet. But remember that I'm telling you also what I think. And from a professional opinion, what should happen. Not that it always does, but it usually does. All right. So the worst day of the week, the worst day of the year, going back all the way to February 25th. Every major closed lower. Every major indices, small caps got smoked the worst. That's why my LabU guys. That's why we're down a little bit more than we ought to be. Energy was the only sector to finish positive, and it was up 3% yesterday. That's because of the hacking, Colonial? Yeah. The hacking of the energy company that supplies part of the grid. They ended up paying a ransom, by the way. If anybody's not following that, it's an interesting story. I could see it even being made into a movie one of these days. It's also a good way to shed light onto unfortunately, how cybersecurity is going to impact the actual functionality of the country going forward. But while we're at it, let's make a little bit of profit off of it. I don't see anything unethical in trading on supply and demand issues. Oh yeah, of course we got the Bitcoin thing. Here's where I'm on that. I think Elon's a troll. I like him. I think he's an innovator, but he's a troll. He's also a little too woke for me. And this whole idea that Bitcoin takes more energy to manufacture, or it's not manufacturing, but as you all guys all know, it's mining, right? Well, so does a factory to build your car, and then also you have electric cars. I'm pretty sure that Elon Musk's a smart enough guy to know where electricity comes from right now. So I don't think it's going to hurt Bitcoin long term. I do think it's a little bit of a ripple effect, and which is another crypto. But I don't believe that it's going to have a long term effect. But remember, I'm up in my my managed portfolio, or the portfolios that I sell on my website and provide to you guys, and that's where I care about longer to midterms. And for those, I just got out. I'm up. Who gives a shit? I don't want to play that game. I'm gonna take my ball and go home. So I'm out on the Bitcoin thing. I told you guys I think it's a good time to sell GBTC. I'll be buying it again in the future, I'm sure. And at that point, even if it's within 60 days, which is what I'm going to talk about later, how to avoid a wash sale, there will be another Bitcoin ETF that I can buy. So I'll take the loss if, I'm currently at a little bit of one, but I'll take the L. And then let's say that something turns around and he goes, haha, just kidding, and in 10 days I want to buy it again. Well, the IRS isn't going to take away that capital loss that I just incurred because I'm going to buy a different ETF. Hope that makes sense. I'm going to talk a little bit more about that later. I want to keep this time friendly, but I also want to get deep. So just deal with it or watch it later. But I'm on one, baby. All right, Tesla tumbled. Yeah, we've talked enough about Elon. Tesla's going to be up one day. It's going to be down, in 6 months, and it'll be up in 6 months or 9 months or whatever that period of time is. The point is it's volatile, and Elon needs to just sit down and shut up. But we all know that's not going to happen. And genius comes in rare forms, and it's pretty impossible to contain a genius, unfortunately. But it keeps it interesting, and he did crush it on Saturday Night Live, like I said. So that's my cat Bella, and she's being a stinker right now. So just ignore that if you don't mind. All right. 3/4 of all gasolines in the Southeast have run out of gas. Not a bad time to be in energy stocks. All right. Bear with me. Bella, you're killing me, girl. Come on. Come on. All right. I haven't figured out got some Elvis going on here. I haven't figured out the pause and replay on these things. I'm sure it's not that hard. I just didn't want this to be the first time. So, all right, cracking on. Oh yeah, Yeti. If you've been watching my stuff, remember my video about Yeti. It beat earnings again. It crushed earnings 42% higher than expected revenues. And it actually cited exactly what I said in my hypothesis for that, which was that the pandemic caused people to be reinvigorated with going camping and being outdoors and buying cool stuff for outdoors. So they were up 5%. Again, one of the best retail stocks that there is. If you're going to have retail in your portfolio, have Yeti. Don't have anything else except for Lulu. Lulu and Yeti. All right. So here, let's get to the meat of it. The meat of it is a wash sale. If you want a pen and pad, I'm going to actually use a pen and pad here. Most people know this, but the point of this is to educate you. So if you don't, here we are. I'm just going to use a quick example. This is all off the top of the head. Let's say, maybe I can even incorporate this behind me. let's say, what's a stock that's down quite a bit right now? SOS, right? Let's look at SOS. Still bullish, but I'm selling my option. I don't want to play this crypto game as I mentioned before. Yeah, it's up pre-market, thank God. Who knows if that's going to hold. So I'm going to show you this chart here. It's loading for me. Just bear with me. Thanks again for being here, guys. I'm really enjoying these. All right, come on, load. All right. So if you look at the chart behind me, let's pretend that I bought SOS at 10. I made an error on my page first try, huh? That's not good. First thing in the morning. All right, I got SOS at 10 bucks. So I got it like here. So I got my SOS at 10 bucks. But now it's down here at 3. If I sell that, whether it's short or long term, let's just pretend that it was long term for, doesn't matter. At the end of the year, the IRS trues these things up on a 1099-B. If it's a brokerage account, if this is an IRA, it doesn't matter at all. So don't matter. If you have an IRA, most people are trading in IRAs or 401k or Roths or SEPs or tax advantage account. If it's just in a brokerage account or a trading account, we would have a $7 capital loss, right? So we won't have to pay versus all those other gains we had in like ERX and EOG and all these other things, right? So I have a $7 loss to help offset that. So I'm not paying taxes more than I should, because just because I made money in one and I lost money in the other, they even it out, right? So I would have a $7 capital loss. Pretend that I make this sell and I decide to get out and just eat it and go buy something else. And then the IRS says that within 60 days, it's actually 61 days, you cannot rebuy that position. And if you do, it will deduct what you're taking as a loss and add it back. So there's no benefit whatsoever to you for getting your hand kind of caught in the cookie jar there. So what you could do is, instead of buying SOS, if you had a stock, let's pretend that it was a copy of SOS, but it had a different ticker symbol. The IRS says they have to be substantively different or substantially different, but they don't look that far into it. And neither does your brokerage house. So the idea would be, let's pretend that there was one idea that you could do on this is buy something like Riot or MRA, or just the price of Bitcoin, since this is a Bitcoin manufacturer. But what I'm gonna do is I'm just gonna call it SOS's twin, right? Let's just pretend there was another SOS that was copied out there, right? Same balance sheet, same books, pretty much everything, just got a different name. Well, I could just buy that. Let's say that this goes down to 2, but I want to jump back in because good news comes out about the company. I could still capture my loss and buy this SOSB, or this SOS copy, and then write it back up as high as I want. So let's just say to infinity. All right. So you kind of swap out your original one for your fake one. Or let's just say you can't really, there is no fake one in an individual stock, but let's just say it's Coke and Pepsi. Let's pretend that I own Coca-Cola and I really like the food and beverage space. It didn't do very well this year, and because of that negative correlation, I'm thinking it's gonna do a lot better next year. Let's say it's a little later in the year. And I decide, man, I really like my Coke, but I really want to kind of take away some of these capital gains that I have in my portfolio, and I don't want to pay taxes on them. So what I can do is just sell Coke and then buy Pepsi for the next 61 days, then buy Coke again. Okay, hopefully you're with me on that. The reason this comes up is that LabU, I'm not getting out. Let me make that very clear. I'm not getting out. And also, it's Friday. No good decisions are ever made after midnight. No good decisions are made after. Shoot, I had a really good analogy and I blew it. No good trading decisions are ever made on a Friday. That's my rule. Obviously, you got to be your own daddy with these things. But I'm definitely holding LabU. I still think that my valuation is completely correct, and I love the fact that the correlations are doing what they should. But if you were to decide that you wanted to get out, as an example, let's say that you bought it at 80. So we got LabU. Let's say that you bought LabU at $80, and then now it's down to $50. And you want to just say, hey, I'm done with this. I want to take this loss here. I want out. Forget it. I don't like it. So you're going to take this loss and you're going to sell out. So you got a $30 per share capital loss. Well, the beautiful thing about ETFs is that there's all kinds of different companies. So LabU has a sister ETF. I shouldn't call it a sister. It's BIB. It's the Proshares, which is a different company. LabU is made by Direxion with an X. So we got Direxion over here. This is the Direxion Daily Bull Ultra. So 3 times on the biotech index. And then we have so we've got the NASDAQ Ultra. I think this one might be 2 times. Let's see, let me make sure. So since it's, so it's 2 times here. The point is that it's very, very similar, and it's going to be moving in the same direction, kind of like that Coke and Pepsi scenario that I mentioned before. So I could sell LabU. Let's say that the NASDAQ decides to turn around. Maybe we decided that we went back into that trade, but we don't want to get our wash sale and have our account have that extra tax burden on us. What we could do is we could swap out. We got LabU and Direxion. We could swap out and buy BIB, which is just a different company making a similar car. Think about it like a Toyota and a Honda, like it's an Accord versus whatever the other one is. What's that? Honda Accord and Toyota Camry. It's very similar. So you can get that upside traction that you wanted, similar leverage like you wanted, and that now you've swapped the position. Now remember, these dollars aren't going to be the same because they're different ETFs. This one could be, let's say, $1 or $100 or whatever, but that's irrelevant because you could just buy the similar amount of dollars, not shares. So I think that's pretty cool. Your brokers never talk to you about that. I know that for a fact because it doesn't benefit them. They don't give a shit about you, particularly your tax burden. I'm giving out some free nuggets here, some good advice, and I hope that you're following and loving it. Please give me some likes, some subscribes. We're trying to keep this under 20 minutes, so go to my website. The Sherpas list is coming out very soon. I want to keep you on your toes for that, so you continue visiting your site, but I will tweet Instagram and Facebook when the Sherpas list is out. I am the Stock Sherpa. I'm here to help you get to the top of the mountain, but I'm also going to go with you instead of just tell you what to do or what to buy or pass it down the road like the rest of the broken investment industry. I'm convicted on this. This is going to work. This is a real thing. I am managing portfolios in the sense of a newsletter here on YouTube, showing you how to do it. You're free to tail. You're also, remember, you're also taking agency of your own investments, and I think you should take agency of your own investments as you would your life. That's what it's all about, to be ever bullish. Everbullish.com, Chase at Everbullish. The Stock Sherpa on YouTube, the first, greatest, and only portfolio manager. Everbullish One podcast, LGF, AFG, LGR. Let's have a great day. Happy Friday.